Bhasin Saab, good morning. How was Holi?
Yeah, good morning, Nikunj. Holi was, we didn't celebrate because you celebrated it on 7th and it was there yesterday and I was in office, the only person in office. What to do? I had to manage the volatility rather than play with color.
So what kept you busy yesterday? You were buying more for your clients or selling more for your clients? और कल तो मुंह मीठा भी हो गया, देखिए sugar stocks were up.
सर मुंह मीठा तो होएगा अगले हफ्ते 18,000 इसी दिन पे you call me on 16th we'll be at 18,000. That's the confidence I have.
Okay, 18,000 on the Nifty. So what will take the markets to 18,000? Which combination of stocks?
Well, you've seen banks lead from the front. I think IT will join in and some of the metals. I think the dollar has topped out. This is a pullback rally. Whatever number comes on the 13th, 14th will be much lower than what was expected. And you know, the Fed's credibility being notwithstanding, I think we weathered most of the storms. Now is the time for outperformance. I was just hearing your video. I think an excellent coverage you did with Mr. Rajiv Jain on what about the Adani group and his putting into money. So I think this is the time to be more brave rather than fearful because we think the best of India is yet to come.
Okay, fair enough. So you continue to remain that pretty optimistic long-term bull, it seems, Sanjeev. Let's discuss then what happened yesterday when it came to the entire auto space, because that as a sector did manage to lift the overall index as well. Bajaj Auto, M&M, Eicher Motors, Maruti. Which is your pick?
Yeah, good morning. So Avan, if you remember in December, you had asked me my New Year picks and top of the line was Bosch. And I continue to see Bosch has hit new highs. By the way, 22,000 is coming. You can add a Motherson Sumi on the OEMs. And I think Eicher and Maruti will lead from the front. You rightly said Bajaj is a very, very big outperformer along with Mahindra. But I think some of the OEMs can outperform from here. Two more of my picks, if you remember, for New Year were Canfin Home, which again was an outperformer, and Tech Mahindra, which I think can be a dark horse in the large cap IT basket. So auto, IT, metals, banks, the whole basket is looking very, very good for the upside. But Bosch and Motherson stand out along with Eicher.
It is. You continue to bet on that stock and keep an eye out on Bosch for the long haul. What about the kind of moves that we've seen in the IT space? Do you believe that given the fact that we have the latest news as well, a report coming in from Citi, they've got a sell rating on a large cap like TCS. What's your sense when it comes to large cap IT stocks? Which side of the fence are you?
So I am rather optimistic, and if you recall, about 3 months back, JP Morgan came out with a downgrade. I don't want to name names, but that was the bottom of the market, 18% rally, most of the IT stocks. Yes, the bellwethers will be under pressure because of the hike in rates in the US, but I think all that is in the price. The language from some of the IT majors has been extremely positive. Artificial intelligence and cloud computing is on the way. So my top pick there is Tech Mahindra, and one of my outperformers has been Persistent. I continue to think Tech Mahindra is headed to 1250 and Persistent can head all the way up to 7,000.
We spoke about Zomato, I think, last, and that was before Diwali or before Christmas, just in and around Christmas. You said you like Zomato. Now, this is one consumer tech stock which has not really participated in the comeback rally. It was around 60 rupees in December. It is now at 54, 55. While Paytm, Policy Bazaar, all of them have made a comeback. Why is that?
So see, the problem is there are some long-term investors who may have encashed what they want. But Nikunj, don't look at this quarter on quarter. I can tell you Zomato's business is roaring. Just yesterday, my son had as you know, he runs a restaurant. He had the largest delivery orders on Holy Day. I'm just giving you an anecdote that yesterday everyone was ordering from home. It was the highest number he has ever recorded in the last 1 year. And most of the credit goes to Zomato. Zomato makes 30% commission online just sitting there. So I think this is a very, very long-term story. And even if it triples from here, it will be cheap. Given the advent of doing away with household labor and getting the food of your choice, there may be some margin pressures, but I think Zomato is a long-term story. Don't track it quarter and quarter. You can add the same to Paytm once the overhang of SoftBank goes away. I think both these stocks can make a lot of money if you are willing to sit the next 2-3 years.
All right, that's the view coming in on New Age Tech. Sanjiv Bhasin sharing his views. Meanwhile, just mapping out yesterday then, and you had the broader markets that did manage to scale up about 0.5%. It was PSC that was gaining quite a bit of traction as a sector, as we flagged off auto, infra, and the Nifty Bank Index as well gained about 0.5%. And it's interesting, Naresh, as well, because we're talking about that outperformance within the entire banking space, the fact that you did see a nice 2% gain so far in the month gone by. What's the outlook? Which would be some of your top bets within the private banking space?
So in terms of banking, we are looking at a period where we'll see selective moves, wherein one by one some will do well, some will say pause. But overall, we are not starting a momentum move across the board. So the stocks which I would be watching out would be ICICI Bank. That is one, because that has corrected decently and now has started making a base. So corrected from 960 down to almost 800 to 840. Over the last, say, 2 months, it has consolidated between 840 to 880. This is a stock which could go back to 930 to 960 levels. So first, the top pick in the large cap banking space would be ICICI Bank, which I expect to do well in the near term. The next would be watching out for IndusInd Bank, purely because yesterday was a strong move. And this has been structurally consolidating for a really long time. The stock is still below the pre-COVID prices. So this is where the next leg of catch-up could come in. In the small cap, it continues to be IDFC First Bank, which has seen a decent correction recently. That looks an interesting buy, and a risky one would be RBL Bank.
Right. Sanjiv, wanted to understand how you're viewing sugar. I mean, these stocks from the COVID lows, of course, have seen a, rank out performance, but wanted to know whether the story is intact. And for those who've missed the bus, can they still hop on? I mean, look at the move that you had, for instance, on a Balrampur Chini yesterday.
Sanjiv? So, Aisha, the cyclicality of them is played out well. And I think that there is a seasonal effect. We know that some of the holidays, the festival season, plus globally, there has been a little bit of weather increments in places where sugar's output was strong. And I think India has been one of the outperformers. I continue to think Balrampur Chini, EID Parry and DCM Shriram are outperformers. But, here I would be on a commodities play. I would like some of the metals. I think this is the time to put your money, because if the dollar weakness is played out, steel prices are headed higher. So I would be more bullish on the commodity side rather than the soft commodity side. I think they have played out well. There is a seasonal effect, and these stocks have already run up a lot. But metals is where I would be very, very bullish.
Within metals, then, Sanjiv, if one had to get a little bit specific, is it that you would advise allocating funds?
So, Aisha, I'll give you 3-4 names. Awan. First would be Jindal Steel. I think Jindal Steel, given its integrated play, the return on debt, they are now on return on equity the best ever in their history. So Jindal Steel around this 565, 570 is giving an excellent entry point. Chola Finance, which is the largest second-hand play on used autos, and you know that their franchise has done brilliantly. I would rather say replace Shriram Transport with Chola Finance. That is a stock which can go into 4 figures. Third would be to play the banking side, which would be through HDFC. HDFC, the parent, is seeing the highest mortgage yields ever, and they just raised some debt, which means their return on equity on an enlarged capital on debt servicing would be very, very strong. So that's one of the pedigree stocks. Tech Mahindra is my top pick in the IT. Like I told you, I think they are going to outperform all the large caps, and that is a very, very sweet spot they are in. And lastly would be IGL. Now, IGL is a dark horse because gas utilities are doing well, and you've seen recently the re-rating of MGL, IGL. So I think all these 5, if you put together, you will be in a sweet basket in this month and the next.
Interesting ideas coming in there, and quite a few from Sanjiv Bhasin. Kunal, what are you making of the charts in metal? I remember talking about Tata Steel yesterday, where you said the charts not looking all that convincing right now. Any other than Tata Steel, where you think there is a trading opportunity?
So I think Hindalco and JSPL are the top 2 candidates in the mid cap or the high beta segment, I would say, from the metal pack. JSW Steel, the stock has been doing exceptionally well. So we don't talk of the stock in the same breath, but then it's been more of a consistent stock right from the 2020 lows and as well as even earlier than that, where the stock recovered quite strongly. It managed to withstand a lot of the volatility, even at a point I think where 2022, when the metal stocks made a new high for themselves in the first couple of months of 2022 and then went to a sharp correction of more than 50%. JSW Steel managed to withstand major part of the corrections, and the volatility was not very high for the stock price. And even in the last couple of months, the stock has managed to show a lot of strength for itself. So that's a stock on the more formidable large cap names, which also looks attractive. So in case of JSW Steel corrects and say comes back towards 640, 625 mark, that's a very good zone to try and buy the stock or accumulate. From the high beta space, as I mentioned, Hindalco sub 400 levels, JSPL just around that 550 odd mark. Those could be very classical, rather classical levels to buy the stock, especially on dips. And we've seen this, for the metal pack, that whenever there is a sharp correction, the counter action for these stocks is also very strong and almost like a V-shaped recovery. So whether it was from 2022 lows or 2020 lows for themselves, the recovery for these stocks is very sharp. So it's always better to try and buy these stocks at a point where the correction is very sharp and the indicators are oversold.
All right. Meantime, Naresh, let's get in your take because you continue to remain fairly bullish on the entire PSE space. Apart from banks and the likes of ONGC, is there anything else that's catching your eye?
So the whole PSE space looks interesting. So the top weights continue to be Power Grid, NTPC, Bharat Electronics, ONGC. These are the names which continue to look very interesting. So if you look at the CPSE chart, it tells you a different story with what is happening with the other indices. Now, there are two ways to look at it. One is you look at the normal chart and then you look at the dividend adjusted charts. When you look at the dividend adjusted charts, a lot of CPSE stocks, the PSE stocks, have actually hit new all-time highs. So whether it's a small one like PFC at an all-time high, or say a percentage point away NTPC, say 3-4% away from an all-time high is Power Grid. So all these names are now starting a major move. Then we look at the Nifty CPSE index, this had last seen a major move in 2014, say around that 2800 mark, and now we are above those levels, 2800 to 3000 mark, which was hit in 2017 as well. So we are looking at a 8 to 9 year breakout on the whole CPSE index. So I would expect this re-rating to continue for the whole PSE stocks. So the same way we saw PSU banks get re-rated, this could be a time where PSE stocks could get re-rated. And a lot of these stocks are very low beta in nature, so they did not see a sharp fall. So Power Grid, NTPC over the last 1 month in the whole correction did not fall and recovered very quickly. So remain bullish on the whole pack. So one could bet on Power Grid, NTPC, then ONGC, and Bharat Electronics is the one which I expect the maximum return from here on in terms of risk to reward, because that is a stock which did not see a big run up in the defense rally and now has consolidated for the last few months. So BL is a fresh bet and continue to be bullish on the rest of the names.
Okay, that's the view coming in on some of those PSU stocks. And Sanjiv, top mid-cap ideas?
So I'll leave you with that idea which can double in this year. It's called SW Solar. I've been advocating that from 275 to 80 level. It's at 310. They have an order book of 4 gigabytes till now, and in the next 3 months they will get 32 gigabytes, which means 24 external and 8 internal. Reliance chairman has already committed in UP of 20 gigabytes, which means that this solar panel play is going to be a dark horse. It was originally with Shahpurji, Palonji. Reliance Energy has bought a 40% stake. The balance sheet is clean. And if you are looking at the next 2 years on green and hydro and clean energy, this is the cheapest solar panel maker in the world. And I think their MEP, that is maintenance, electrical and plumbing business, is doing extremely well. So look at this dark horse, which can be a doubler from here. That would be my top mid-cap pick.
We leave it at that, Sanjiv, and always great to have you on the show. Quite a few ideas coming in from Sanjiv Bhasin. He's definitely betting big on metals. Sterling and Wilson is a stock that he's liked for a while now, and that continues. He continues to be bullish on that as well as HDFC. But on your